Hi guys, hope you had a lovely day. Today we are going to cover market approach. And in market approach, I'll be discussing first thing, why do M's, W's, and head and shoulder fail, and the other thing, analyzing how to properly approach, analyze the market. Now, why do M's and W's fail? If you're together with head and shoulders, there are three reasons or 3 pointers I've highlighted. Now, the first reason why M's and W's fail is because of people are not looking at bigger time frames. You will find that you are analyzing, you see an M on a smaller time frame. While you see an M on a smaller time frame, but the structure on the bigger time frame is still saying something else. For an example, you have this time frame there and that time frame right here. In this time frame, let's say you have opened 15 minutes and you have here where the time frame week. Now, if on the 15 minutes we found a structure, market is going down, and it is now hitting your expectation. We expect the market to move all the way, but on the bigger time frame you find it was an accumulation or an M right there. It broke down here. Then here at this point is what's happening. So the likelihood of this type of W to fail, to continue downwards, is very high because of structure which here in the frame. Here in the bigger time frame, we recently knew M there, and here you had impulse. Probably most of the time you'll find that this is a correction. Then you get another impulse. That's one of the reasons why you get your M's and your W's failing, is because now the M's and the W's are controlling the bigger time frame structure. Part of this reason, I remember the graph, the live market, we had a very nice which failed because of in the V50 right here. V50 M right there. We had this M here. So shoulder there. And people entered it. It was very nice. When they enter that M right there, what the market, this big M, retraced here and started to shoot up. Again, V50. We're talking about where is the talking about right here. In a bigger time frame, when we look at it, especially right there, when you look at it right here on weekly, it was on the structure here. Is it completing the buy? That it has not yet completed which makes it to shoot down at the current moment. But that failed because of people did not look at the bigger structure. Same applies to this right here. You have a smaller M right here. You have the impulse correction right there, and you have another impulse. So people enter this M thinking that this is going. Why did this M right here, while this one right here, this double top, passed, this one shot all the way down, all the way. Why is it like that? Now, me to my second point. People take trades which are not at the major support and resistance. Now, this M right here failed because it was not at the major support and resistance zone. Top part here was not at the support and resistance zone. This one, as you can see, if you go to our bigger time frame right there on weekly, why it took the resistance zone, but the market is reacting. Major support and resistance zone plus price action right here, the doji. That is why this now it has passed net. So people don't look at bigger time frames, what's happening there. And the second thing, they'd like to trade in between. We like to trade in between an M or a W in between, and we like to enter and in between. A big problem. So when I say in between, I mean in between zones, major resistance. What you look at most of the time, is it at, if you are trading a retracement pattern, your M, your W, or your head and shoulder, is it at the major support and resistance zone? Is it supporting the structure in the bigger time frame? Now, the third thing, contradicting market structure. I'm going to use the same example there. This M here, M right here, it contradicted market structure. Impulse, correction, impulse. After an impulse, you expect a correction, then you expect another impulse. That is pure market structure. Impulse, when you have an impulse, you have a correction, then you expect another impulse to go downwards. Impulse upwards, correction, you expect another impulse to go upwards. Some people call it the A, B, C, D pattern. So always look at structure. Is your M, your W, your head and shoulder contradicting structure? Always look at it contradict, or is it in line with market structure? And when it's in line with market structure, then you know that the market normally will go your direction when it is with. So these three main points, they are very, very important to take into place and to take into consideration when trading. Look at your bigger time frames. Look at what's happening in a bigger time frame. Second thing, look at your major support resistance. Where you are taking the trade, is it at the major support resistance zone? Now, the third thing, the trade that you are taking, is it contradicting the market structure now? You know, when you have an impulse and it's the only impulse in that direction you have, then you start to have a correction, a W or an M or a head and shoulder, the most likely the impulse, the second impulse is going to be in the direction of the first impulse. So that W or M will likely So this is why most of the patterns you find, you see a very nice M in the market, very nice, like here, see a very nice M in the market. You want to enter the M. Then after you entering, the market shoots in your direction. It's because of those three reasons. Is it in line with the bigger time frame? Does it contradict structure? Is it at your major time frame? Is it at your major support and resistance? Those are the important things to look at when you are analyzing the market. Like let's look at this one in a smaller time frame. Here, this W here. This W. Some people have entered the W right there. Show you. I've entered the W right here, this one, and said, oh, it's a buy. Oh, okay. There we go. All right. It has crossed our major zones. So nice. And the market now, it's you enter, it tries to show you are in a little bit of profit. Then after that, you find this shoot going downward. You wonder why. What's it? The time frame. Time frame. Check structure. The structure is structure. And as I've shown you, firstly here, you had this impulse, the correction. You expect another move downside. When it breaks, when it comes out of this contraction, we expect the break to the downside. Going to the downside. That's the way we expect the break to go. Why? Because we now be agreeing with structure with structure, depending in structure, and we'll be following now our rules. It will tick. The break will be at the major resistance zone. It will be a tick. Market structure. It will be also a tick. So those are the type of things you look at when trading your M, your W, heading toward. Now, in order for you to avoid now trading badly or in this mistake of trading M's and W's, I have given you here analyzing step or market analyzing steps or market approach. The first step that we do, we draw our support and resistance line on the bigger time. That is always the first. Let's look at any first step. Go to your weekly. Start at the weekly. You can go to monthly. You'll find nobody's stopping. We put our support and resistance. Support and resistance. Resistance lines. Support and resistance lines. I'm going to put 10 here, but this is not a valid support and resistance line. It doesn't have it. Now, then we come to our second step, adjust support and resistance line on the smaller time frame. Because we were in weekly here, we now move to daily in order for us to adjust our lines, that precision that we want to adjust support and resistance lines. We can adjust them. There we go. This one we can put here to more value. Yeah, now it rejected here, forming a head and shoulder. We'll go now to our 4 hour. 4 hour, we have line here. We have that line there. Then we check any zone that we think. We have this one right there. Touch, touch. It touched and it touched. And you can adjust right there. Now we know that this head and shoulder major zones. So if we're going to take a buy, now this also applies as our neckline. Once it breaks here, now we have a proper buy from here up until right at that portion. So we go to small frames. Okay, so this needs a little bit of adjustment. There we go. So it's fine. There. Touch okay. It touch fine. It touch fine there. And therefore, it also there. Okay. Then we go to a smaller time frame here. You see this double bottom here. You see why it passed? It was touching our major zone right there. This is more or less like a V bottom. You have a pin bar there. So you do that. Then look at structure in bigger time frame. So if we are about to take a trade, we're taking a trade, we're going to come to a time frame and look at what is saying. Structure at this moment is still supporting the sell. They have sell movement. So this is a possible retracement because of this right there. The structure is still a sell structure until we have. So the other thing, look for entries in smaller time frame. That is the last step that you do. Look for entries in smaller time frame. Minutes, right there. Like I told you, this buy we could have taken it nicely, this buy here, I will not have taken it because first thing, it did not touch, even though it's considered as a touch, it did not touch my my major line. Trend was broken there. Go up and look in a smaller time frame, still right here. So if it breaks here, I'm going to check what's happening in the smaller time frame. Then when I check in the smaller time frame, if the retest gives me a very nice retest, at this area right here, I'm going to take the buy. Know that this is a valid head and shoulder. Head and shoulder looks valid, like it will push the market up here. Then we'll see what the market does. So at this moment, we do not take trade because of the head and shoulder. If as long as it's not past the neckline, high possibility of also failing. So that is the other thing that we like to talk about with entries of head and shoulders, that neckline as well. But the reason why for this topic, because of this guy here. Because of this guy here. When you have a situation where the market going down, it did an M, you had your neckline and it passed the neckline. Then you got your here, you are expecting it to go up. The reality hit, the market downwards. Okay. Then you start to wonder what really right there. So first thing we do when you're about to take such a trade, look at the market in a bigger the market whether this is going to fail or not. Second thing we look at, is it at the major support and resistance zone? This W at the major support and resistance zone. Then the third thing we look at. Now, if you look at contradicting market structure, if you look at this, it's impulse. We had the correction here. So therefore, we expected an impulse to go in downwards. So we had low expectations concerning this W. Impulse, correction, where do you expect another impulse? to the downside. You can see it formed a very nice head and shoulder, head, shoulder, agreeing with the impulse. Just impulse. You have the neckline right there, then you have the cell right there. That's part of the reason why it shot down. So we don't just see an M or a W, then we enter. You see a head and shoulder, then you enter. No, it doesn't work that way. You check your pointers, check bigger structure. What's the structure saying? Check, is it at the major support and resistance zone? Check, is it not contradicting market structure? This was contradicting market structure. Hence the W now. So then people were, why did we have this perfect W and the market started to shoot all the way down? Because now people now are not expecting. So always look at market structure, always look at where the market, always look at market structure, always look at where the market is going, and you are going to have your proper entries every now and then. Have a lovely day and happy trading.